Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, let's talk about a Vegas casino app company called PlayStudios, ticker symbol MYPS. That was a heck of an intro, wasn't it? So this company, in a nutshell, has an umbrella of apps where you can play casino games, you can play board games, you can play puzzle games. They're expanding. I don't really want to define it in my own words because there has been so much growth over the last year. Let's just take a peek at their website to kind of see what they've done over the last year or so, kind of kick this video off. All right, so where I want to start is June 2021, where we can see MYPS and MYPSW make its introduction to the NASDAQ. The ticker symbol MYPS represents the stock in the company. MYPSW represents the warrants for PlayStudios. So beginning June 2021, we can see PlayStudios enters the NASDAQ. Essentially, the company adds rewards to its offering. So the more you play the app, the more opportunity and chances you get to um, exchange those coins that you've been collecting for, let's say, activities such as helicopter exploration, going on cruises, staying at hotels, exchanging for meal certificates, casino play, table play, slot play, drinks, food, shows, you name it. So basically, this company is offering you this almost same type of benefit as if you're going to the casino, but you can play in the comfort in your own home on your couch. So that is one of the reasons why I'm really into this stock. And we can see on November 2021, they did expand to purchasing the license to Tetris. I think Tetris is one of the best games of all time. I don't personally play it regularly, but I do have the app and I do play it sometimes. And as we go down, we can see there's partnerships with streaming platforms. And we can see in 2021 streaming John Legend's Bigger Love Global Experience. August 2022 enters gamified rewards to Web3, launching of the blockchain division. Now, not a huge expert in blockchain, but I think having this as part of a division within the company is going to be important down the road as we continue to expand upon blockchain as a whole. So I think this is a great play for PlayStudios. Continuing to grow, October 2022, they acquire the Portland-based game developer Brainium. I'm actually from Hillsboro, Portland, Oregon. So this was kind of cool to see. So they acquired Brainium with a ton of different games. These are more of your board and brain games. So now it's going to be offering millions of new players to the Play Studios rewarded play value proposition. So if I had to kind of summarize what Play Studio is, it's I want to say it's a one of a kind mobile gaming app that lets you play for real life rewards. You don't have to go to the casino to get these rewards, number one. Number two, you can actually exchange these for really cool stuff. Travel. They recently added Pacific Cycle, so you can get electric scooters, electric bikes, cruises, hotel discounts, comped rooms. So I think this is a multifaceted investment where we see it, number one, radically changing the gaming arena. When you think of gaming apps and stocks, you have Glue Mobile, which was acquired. You have Zynga, and a few others, but they're not quite like studios, Play Studios. Um, so, yep, that's my initial thoughts on why I really love this stock. This is my biggest holding. I do have an investment here. Um, so, of course, I'm going to talk positive about it, but there's also some negatives that we'll bring into the light. But please do your own research. I own quite a bit of shares, around $5.90. I'm continuing to add every week. My goal is to get to the six-figure share position. I think we will see more downside, which I'm excited about. But that is my disclaimer here. So do your own due diligence, and let's move on to the next topic. So, being that I own this stock and I want the company to do well, I am a consumer and a user of Play Studios offerings. I play their app every day, their MyVegas. I get my 5,000 gold coins for the day and then I sign off. But I just want to show that I'm not the only one who is optimistic about this company. We have two articles here, one from August 14, 2022, calling it massively undervalued, and then we have another one from November 25th, 2022, calling it a no-brainer in 2023. So one of the things that we want as shareholders is for stock price appreciation to occur. Now, I cannot give any targets because I can't predict the future, and that's never worked out well for me when I've announced a target and it never hits that target. So I am just stating I believe the company is currently undervalued depending on your time horizon. If we're looking at the next few months, the company is overpriced. I think we could see some dips in the current price, but in the long term, I believe this company is number one, breaking into a new industry. They are not only killing it, but they are also kind of revolutionizing how gaming could and should be. Number two, when we speak about stock price appreciation, we think about a strong CEO, which we'll get into. We think about strong employees, directors, overall sentiment, which I believe Play Studios has. If you go on YouTube and you type in Play Studios, you will see some of the employees, directors, VPs giving talks over the last couple years. So another piece I wanted to show is the actual stock price. Let's look at the stock performance. So apologies there. So we have the last price was $4.24. If we look at the year to date, it's at 9%. The SPY is currently at a 4%, so this company is killing it. But again, I specifically don't trade in the very short term. I love the long-term capital gains. I like the benefits to it. And I think I can see this company appreciating a lot higher than where it is now. So the year to date looks really nice, but let's look at the 1 year. It's down 6%. And if we look at the max, which goes back to here's June 11th when it became on the market, and it's only gone down since. But we can see when it was ticker symbol ACAC, it traded around $10 and then dipped all the way down to, I believe, 343 might be the 52-week low, and the all-time low. So again, I think we could go lower. I'll do some fundamental and technical analysis later, but looking at these last acquisitions, we've got the Tetris license, we've got the Brainium acquisition, and all the cash the company has. I believe the company has 70 million in cash. I'll have to go out back and double check. But the appreciation here, I think, is heavily undervalued in the 1 to 5 year span. But I think in the next few months, we might see under $3 potentially, crossing fingers. I think that would be an amazing deal. That would allow the CEO to continue purchasing. And Play Studios has, I believe, a $50 million reserve just to buy back company stock. So not only would that show that they have conviction in their own selves or in their own company, but buying back stock is very beneficial to shareholders. Let's move on to the next topic. Play Studios dropped an investor presentation on January 10th, 2023 that I just want to go over with you guys really quick. As a quick highlight, I will drop the link in the video if you do want to check out all the pages, but I do just want to call out the important ones that I believe are relevant. So let's go ahead and scroll on through. Disclaimer, Samir Jain, hello. Okay, key investment highlights. They note their strong leadership with aligned interests. That's great. Calling out their CEO is the second largest shareholder. Who's their number one shareholder? We can look into that. Rapidly diversifying game portfolio. Look at Brainium, Tetris licensing. Sustained growth and strong economics. Talking about cash. So they have 142 million cash on hand with 50 million share repurchase program. And their loyalty platform is a key differentiator, which I absolutely agree. I don't think any other casino gaming app company comes close. So let's continue to go down. Um, just talking about each of the structures. Going to go through 9 studios across the world. Very cool. Vietnam, Hanoi. Very cool to see that. Continuing down. Here's all the apps they have. So the one I play is right here. This one is very fun. The Vegas Bingo is really fun as well. I believe early 2023, they're going to integrate all of the reward systems so you have access to your rewards throughout all the games. I would love to see a Pai Gow added. That would be great. Andrew, PlayStudios team, if you're watching, a Pai Gow game would be really fun. Face up, Pai Gow. Okay. Continuing onward, nothing really different here. Average income of people who play is 80,000. Um, where is they don't say it here. I want to see what they're ranked as. Okay, so they call out more competition, rising costs, and targeting is less effective. The ability to launch and scale games is more challenging than ever. What's going to change that is if people are stuck inside, which kind of people are, I think, going out less just due to the overall health crisis. But I think we're getting back to normal. But continuing onward, nothing really here that I want to call out. 4 continents, 17 countries, 84 partners, 275 brands. My head's in the way. 275 brands. Going onward. Okay, so they're showing positive trends. We can see that COVID right here, the rise up and then the downfall, and then it's sustaining back. Same with rewards inventory. Cumulative rewards purchase. We have COVID, and then we have the trend continuing up, which is good. Real game results. Okay. Long-term impact. Contraction. Looks like contraction was contracting and now it's kind of expanding again. Going on down. The opportunity. Cool, cool. Okay, so strategic growth goals for 2023. Expand or advance the play reward system. So this is getting all of the apps with the rewards programs implemented. Increasing profitability, which I think they can do with their, I think their Brainium is going to increase that and also their ads. Expand and diversify. Scale audiences for bingo and MGM slots live. I would love to continue playing bingo, but if I'm using my time towards one of their apps, it's definitely the slots. Enhance our business model. In-app advertising, e-commerce, Web3, and blockchain. In-app advertising is something I want to kind of touch upon in another slide. Introduce Web3 functionality. My head's in the way again. So it's this one where my head is on it. Introduce new reward categories and enable player-to-player reward transferability. That's pretty cool. I've never transferred my points or coins to anybody, so let's see if that changes to where I'd want to. Or using those coins to your tokens to purchase crypto. That would be kind of cool. Play rewards as a cross driver in our game. So again, all of these different apps having the same rewards. They have MyVegas Blackjack, get MyVegas Pai Gow. MyVegas Heads Up Pai Gow. Okay, so this is one of the important ones I wanted to show you guys. Let me just move my head right there. So we can see this area right here has been at a stall, and they attribute that to expansion of headcount into lower cost regions and also investments into growth games such as MyVegas Bingo, slots, Tetris, etc. I would have to agree that this is attributed to that. Um, Not only do they have that, but they have Brainium as well. I think they are building a strong foundation and base before they start that next trend upward. So I think this is totally organic. Let's continue onward. Pathway to higher margins is clear. Okay, I mean, there. I just gotta show me to believe it. Okay, so this is one of the important ones I want to show you guys. Let me move my head again. So advertising will now be a meaningful portion of total revenues. That is huge. Look at the revenue mix post Brainium. That is pretty big. That's awesome. Right here, it's a big slice of the pie. Before that, it was not. It looks like it's going to double. Ad monetization is higher margin, no platform fees. So again, that's another way how they're going to increase their margins and look more appetizing in terms of investments. That's one of the things I wanted to call into. Again, more improving on profitability. Don't really care about this. Look at this. This is awesome. So focusing on improving profitability as well. So this one right here is 2022, and here's 2023 with Brainium. So we can see their total addressable market has increased double, triple, not triple, increased quite a lot. So they also call out that games will now be more evenly distributed between casual and social casino. The casual gaming market is 3 times the size of social gaming, so I was kind of on the right track there. Okay, this is another one I wanted to show you guys. Let me move my head again. Okay. So they have casino, which is a 7.5. I believe these are total addressable markets. So casino is their big one, their bread and butter. Arcade and action, I'm not sure what arcade and action they have, but they have some representation. And then brain and puzzle, which is your Brainium acquisition. So 23.5 billion that they addressed in the slide before. So again, cool slides. I'm glad they released them, even though they didn't really have a reason why. Maybe they're going to use it in their next earnings presentations. And so the Brainium acquisition kind of touches upon their catalog, their daily active users, revenue, EBITDA, high margins, and opportunity to drive synergies. Again, get that high or get the Pygao, base up Pygao. Strong capital position, so this is really important as well. They have 142 million cash after the Brainium purchase. They have $81 million of unused facility, positive cash generation. They have 290 million in available liquidity. That is awesome. They have 50 million share repurchase authorization. This company only has upwards to go, in my opinion, if you have a patience long-term mindset. So 1 to 5 years, buy, hold, accumulate. That's what I'm doing. Do your research, talk to your financial advisor, see what they have to say about this. Financials, boring. Okay. They again just talk about all of their daily active users, monthly active users, revenues, third quarter, debt. They have no debt. So in these high interest rate environments, they are not getting slammed because their debt rates are 0. Okay, so that's all I want to show you guys here. Let's move on to the next topic and continue talking about PlayStudios. Just like any growing company, there is going to be growing pains. There are going to be lawsuits. There are going to be unhappy investors. There will be failed projects. And this is required in order to grow. My PlayStudios or PlayStudios did have one of these instances where they had a project which was Kingdom Boss. It was a hero RPG game where you could basically be the ruler of your little world, advance new levels, build upon characters, do challenges, etc. And it completely flopped. This led to lawsuits that are still ongoing with the company, that I did want to show as obstacles because in order to strive and grow, there will be obstacles. Let's take a peek at some of these road bumps. So, the first obstacle that we're going to talk about is the Kingdom Boss failure. So, basically, Play Studios had communicated that Kingdom Boss, which was going to bring in all this revenue, all these profits, was on track for a 2021 release throughout that year. The company represented that it would enjoy significant revenue and profits from this launch, including representations near the SPAC merger between the company and ACs. This is when Play Studios became its own entity, MYPS on the NASDAQ, and MYPSW for the warrants. And then on February 26, 2022, the company announced that Kingdom Boss had been indefinitely suspended. There is current lawsuits going on with this, so we don't really know if they broke the law. Were they not being transparent with investors? You can join this class action, not a class action, but this lawsuit. If you suffered a loss and you're a long-term shareholder, there is information on, if you just Google Play Studios lawsuit, you'll find a place to read more about it. But let's talk about another obstacle, which has been the macro environments for stocks. Play Studios has essentially gone from $10 to what is now $4, and it went as low as $3.43. Again, this is what I believe a direct reflection of the company going through growth and growing pains, and also macroeconomic events like stuff that's going on in the world that's really out of our control. Um, so if we look all time, this is down 57%. We have seen many other companies that have been, down 57%. We've seen Netflix be down 57%. We've seen Amazon be down around 50%. So many, Shopify, you name it. There are tons that have dipped below 50%. Facebook, you name it. So this is another obstacle for the company here is the stock price. The CEO has said on a couple occasions that the current markets do not reflect the true stock price. I kind of agree. I think the true stock price right now is around 4.40 to $5, just based off of sales and shares outstanding and cash on hand. It does not include the Brainium acquisition and future revenues, though, which is something that I'm lacking. But in terms of obstacles, we have the lawsuit, we have poor stock performance, and I don't think there's anything that really stands out. If there are some under the surface things where we have some Better Business Bureau complaints from disgruntled users. If you read through them, you can see that the company responds to every one. Another one is Glassdoor, where you have the typical, people posting they hate their job, they love their job. I think the company has an okay rating. So we have the first thing that comes up is a 1-star review. I'm trying to look at the company as a whole here. So again, we have 124 reviews, and if we just click on this before the paywall comes up, we can see that the company has 76% recommend to a friend, 91% approve of the CEO. So, under the surface things that are kind of obstacles here. And again, these people who post to the BBB or Glassdoor, public forums. They could have short positions on the company where they are betting that the stock is to go lower. There are disgruntled institutional investors, which we'll get into, who criticize the CEO. So we'll look into that. But I think that covers many of the obstacles. I think there another unspoken obstacle is they are a casino and gaming app, and there might be some regulation or some type of permitting or rules on app stores in the future, potentially. But I think they've curbed that so far. So let's move on to the next topic and let's look at the CEO, Andrew Pascal. Let's look at the pros and cons of him. We'll look at the criticisms from institutional investors and other disgruntled investors, and just the overall history of Andrew Pascal. We can, just by doing some quick research, he is related to Steve Wynn. If you're not familiar with Steve Wynn, Wynn Casinos. So let's jump right into the next section. I'm not Andrew Pascal, but this is Andrew Pascal. Okay, so let's get a sense of the CEO of PlayStudios. I have my own opinion on them. So I just want to give you guys some quick information about the CEO. Again, we love strong CEOs who are number one. They have good families, they have good public persona, they have experience, and they're professional. So let's go through his life, basically. um, so we can see he's been the CEO of PlayStudios for over 10 years. That is awesome. Um, they have we went all the way. They have over 9 offices, I think 7 or 9, hundreds of employees. Good for him. So he used to be a managing partner at Pascal Ventures, founder and co-chairman CEO at Elan Leisure. If you're not familiar with Elan, do some research on Elan. President and COO at Wynn Las Vegas. Again, Steve Wynn is his uncle. There is a connection there. Wynn also owns a percentage of PlayStudios stock. How much? We'll pull that up here when we get to our fundamental analysis. But let's keep going on. He was the president, and CEO of WagerWorks, casino solutions and content supplier to the regulated online casino industry. Partners included MGM Mirage, Sky, Virgin, Sony, Pearson Television, IGT, Action Gaming, Williams. With its focus on regulatory compliance and rich game content, WagerWorks established itself as the partner of choice for legitimate casino and media companies looking to enter the online gaming market. What a blossoming career he has had, going from that to now PlayStudios. It's kind of like hindsight, Let's look at his other experiences. Okay. Another one was Silicon Gaming, founder and CEO. That was for 6 years and 6 months. It was acquired by IGT. His other WagerWorks was also acquired by IGT. Andrew, if you're watching this, do not sell out PlayStudios. Keep this for the next 5 to 10 years. If you continue to execute, the stock price, I think, will go well above and beyond where it is now. Stay focused and continue to make great strides in growth with PlayStudios. Don't sell yet. So we can see Andrew has great experience. So I think his pros include experience, having connections in the Las Vegas area, family connections. He sits on the board of Shaquille O'Neal's charity, I believe. Do your own research on that. I think those are his pros. I think he's been a pretty good CEO at PlayStudios. He has purchased a ton of stock. He is the second largest shareholder. So I think those are all pros. He lives in California with his family. PlayStudios headquarters is in Vegas, so I'm assuming he comes out here pretty often. So the cons of Andrew Pascal. I think we just have to look at where the Kingdom Boss failure. I think although that is a con, I think that's also a great learning, a great learning experience, not only for him but for the company. I feel like that type of failure is necessary to grow and understand next projects in the RPG space. I think they will get there with a game acquisition within the next 5 years at least. Um, so there was that failure. There's a stock price failure, which I don't want to say it's all his fault. I think it's a number of things. We have the macro trend of the economy. Other stocks are continuing to fall. Kingdom Boss failure. Um, Acquisitions. I mean, spending of cash is not a bad thing here. Play Studios is purchasing assets. They're growing the studios. They're growing the team. But I mean, that's not just a Andrew thing. That's just growing. It's just growing pains, in my opinion. There are other criticisms of Andrew, um, but we will look at the criticisms and then we'll take a more personal look at Andrew's life. Um, he has a pretty rich history with Vegas, how he started, some of the articles he's been included in over the last decade. But before we get into his more personal story, let's look at the criticisms, especially from Stephen J. Cloobeck. All right. So when we think of Play Studios, if you've been here for a long time as an investor, you might remember the letter from Stephen J. Cloobeck, who basically ripped Andrew Pascal a new one. Let's just read through this together. It is quite the story. Let me try and do it without my head getting in the way. I write on behalf of myself as a substantial shareholder of Play Studios, as well as fellow shareholders who, like me, are frustrated with the direction of the company under its current management. I implore you to take immediate action and replace Chairman and CEO Andrew Pascal and his management team before shareholder value is eroded further than it already has been. Under Mr. Pascal, the company has proven time and again that it overpromises and underdelivers on critical product, revenue, and profit goals. Is it any wonder the company stock has not only underperformed the market, but also its closest competitors? One commenter called Play Studios one of the worst performing de-SPACed companies over the past year, and that was last August, before the stock plummeted even further. Another, more recently in February, wrote a commentary titled, Getting Played by Play Studios. Not exactly a public vote of confidence in management. I and other shareholders are also curious, and the SEC might be too, about how Mr. Pascal profited by selling high into last year's SPAC transaction, then proceeded to miss revenues and lower guidance right out of the gate, cratering the stock. Now, with the stock scraping the bottom thanks to Mr. Pascal's mismanagement of the company, he is a buyer again at prices ranging from $4 to $5. Has the board taken any measure to ensure that he is not trading on privileged information that other shareholders are lacking? Question mark. Most recently, in what some might call his latest act of financial malpractice, Mr. Pascal has chosen to squander the company's cash on misguided buyback of outstanding warrants that are underwater by more than half of their exercise price of $11.50. This, despite Mr. Pascal saying on February's earnings call, we maintain our belief that the best use of our capital is to deploy it into the strategic growth opportunities as opposed to purchasing our own stock. What does he think warrants are if they are not the right to purchase stock? Were this the only act of mismanagement, it might be excused as a rookie mistake for someone with limited experience running a public company. But it's not. Of equal concern is his pattern of inflated revenue projections and failed product delivery promises that are undermining confidence that the management team, including Mr. Pascal, can execute the company's strategy. By a way of example, when the company first announced it would go public in a $1.1 billion merger with a special purpose acquisition SPAC in February 2021, management told shareholders in an investor presentation that expected 2021 revenues of $328 million and an estimated 435.2 million in 2022. These projections caused the stock to trade at a high of more than $10 almost a year ago, double the current price. It's a different story today. Instead of 328 million, 2021 revenues were a disappointing 287 million. And without disclosing the diminished expectations, the company said in February earnings call that 2022 revenues would instead come in at an underwhelming 305 million to 325 million, far below the previous guidance of 435.2 million. Rather than owning up to management's failure, Mr. Pascal chose to gaslight shareholders, pronouncing on the call, "Our top line results continue to outpace the broader market, and our revenue growth has generally outpaced the market." What market is he talking about? It's the same story of unmet promises and lowered guidance with EBITDA. In its February 2021 investor presentation, the company claimed it would achieve adjusted EBITDA in 2021 of 21.8 million and 89.9 million in 2022. Wrong again. Management now says it expects 2022 adjusted EBITDA in the range of $40 million to $50 million, which would barely beat 2021, which itself plummeted from the $58 million produced in 2020. This is not what the company shareholders were led to expect, nor what they deserve when they invested in the company based upon the representation by board and management. Okay, so Mr. Cloobeck is pissed. I'm taking a breather here. Last part. In yet another management blunder, the company has been opaque at best about the bungled release of its Kingdom Boss game, a game that Mr. Pascal once claimed would produce annual revenues north of $60 million, while gushing that it was an innovative and beautifully executed RPG game that brings the dynamism of rewards to the $6 billion vertical. Now, after suspending development of the game, management plans to take charge on what will likely be close to $9 million and write it off. In the February earnings call, Mr. Pascal said the game has struggled to achieve all the criteria that were established for wholesale launch, and we really struggled to get all the metrics to a place where we felt like the product was healthy and investable. What would these criteria and metrics be? Who knows? The company has never been specific about the issues. Why would management pull the plug on a game that has actually garnered decent user views and a 4.5-star ranking on the Apple App Store and a similar ranking on Google Play? What is management hiding about the fiasco? As noted above, this is just a summary, but by no means the only examples of mismanagement under Mr. Pascal and his team. He has fumbled on execution, and shareholders are paying the price. I am writing to the board because it is your responsibility to assess the overall direction and strategy of the business and supervise and evaluate the CEO. I believe the facts show that Mr. Pascal has not performed. I am writing to request that the board do the right thing and replace Mr. Pascal with someone who can restore confidence that this company is on a path for success. Sincerely, Stephen J. Cloobeck. Okay, so a lot to unpack. He's pissed, and in some ways he is right. The Kingdom Boss rollout was horrible. They misguided investors to some extent. In terms of insider trading, selling and trading, I think that is speculative right there in nature. I think Mr. Pascal, the CEO, I think he did what selling and buying, I think he did that based off of the valuation of the company at the time. I think a lot of people would have done the same thing, and I don't really consider that out of the question or malicious. In terms of Stephen J. Cloobeck, he was pretty harsh here. I think once this article came out, we hit a 52-week low around that time. I would be remiss if I did not talk about Stephen J. Cloobeck for a minute. He was very passionate in his letter, and admittedly, I was with him But, I think the great thing about strong CEOs and strong boards and strong stocks companies is they ignore um, the haters, and people who strive ignore haters as well. I'm not saying Steven is a hater. He is one of the largest shareholders in the company. He was at the time. I don't know if he is now. We can actually go and check. We'll look in the fundamental section. We're going to look at MGM Holdings, and we're going to look at Stephen J. Cloobeck. But Stephen J. Cloobeck, he is a very successful businessman, but his decisions sometimes are not the best. So I'm just typing Stephen J. Cloobeck controversy. Um, you know, there's I don't know. I don't want to show this on my YouTube because I don't want to get hit. But basically, um, this really dings Stephen J. Cloobeck's persona per se. That was 2021. If we 2022, let's see what if anything came up in 2022. Let's look at his Wikipedia. We're spending a lot of time here on Cloobeck, but he just seems like an outspoken person. I don't he's very passionate about what he believes in, is what it sounds like. So, you know, um yeah, I mean, take it for what it is. He's an outspoken shareholder against Play Studios and Andrew Pascal. So that's the criticisms from there. We also have some negative sentiment articles on some outlets. I think simply Seeking Alpha, so you can check that out. But let's kind of dig in a little bit more to Andrew Pascal's history in the casino business with Steve Wynn and kind of how he's transformed himself to where he is now. All right, so I am going to be doing a little bit more digging into the CEO. This is to try and learn more about Andrew's character, how he has been in the past. This is a Forbes article from April 20th, 1998. Just kind of seeing how he grew up and just reading about Andrew's up and comings and to how he got to where he is now, which is the leader of one of what I think is the best gaming apps out there. So this article from Forbes in 1998, just reading through this, you want to stay on the good side of the guy who runs the mighty Mirage gambling empire, for hell hath no fury like an aroused Steve Wynn. He has been known to chew out an engineer for a single bum light bulb in his glitzy Mirage casino in Las Vegas, so it's no surprise he's still steaming over the departure of his nephew, Andrew Pascal, 32. My uncle didn't take too kindly to that, says Pascal, who was coaxed away from the Mirage by one of the founders of Palo Alto, California startup Silicon Gaming Inc. So if we look at Andrew Pascal's bio, we can see the Silicon Gaming right here, founder, president, and CEO. So he was coaxed away to basically start this position. Whoops, go back to the Forbes article. So this kind of lets us know Steve Wynn has very high hopes for Andrew Pascal. As we'll see, Steve Wynn has a multi-million-dollar investment in Andrew's Play Studios. So Wynn apparently had high hopes for his nephew. As a cocky college kid, Pascal spent summers working at Wynn's Gold Nugget Casino and later joined the company. In 1989, when Wynn opened his premier tropical-themed Mirage Casino, he tapped his nephew to head slot operations and marketing. Pascal oversaw 350 employees and over $110 million in annual revenues and served on the Mirage's 8-member operating committee. Bigger things lay ahead. Continuing to go through, But Pascal had an independent and creative streak. He started tinkering with slot machines and working with industry giant IGT to develop proprietary games for the Mirage. When 1-year-old Silicon Gaming came knocking in 1994, Pascal saw it as an opportunity to revolutionize the slot machine industry with a new fangled software-driven machine. He signed on as the company's executive vice president of marketing and game design, which is what we saw in his LinkedIn. So things are lining up. Going through the article, um, I guess we can read this part. Silicon Gaming shareholders are waiting for a payoff. After going public at 10.50 in July 1996, the stock shot up to $23. It's since sunk to $9.88. However, a Fidelity fund recently bought a 7.98 stake. So a half a million shares. Not all casinos are convinced that Silicon's gaming slot is worth 12,500, nearly double the price of a traditional machine. Yada yada yada. Okay, and then we have this last sentence saying, and then there's Uncle Steve's grudge. Allegiance counts in the tight world of gaming. Even when's bitter rival Donald Trump says Steve deserves more loyalty than that. And I think that's in regards to Andrew leaving. But this is 1998. Let's move on to the next article we have. Let's just get out of here to save bandwidth on my computer. The next article we have is a local Vegas article. So going back to Andrew Pascal real quick. So Andrew joined Wynn in September 2003 and left in November of 2010. So he had 7 years at the Wynn working under his uncle. His uncle took him back under his wing. Again, they have a strong relationship based off of what we are seeing in the media. And here's a good post by someone called Chuck Monster. Here's a shocker from the boardroom Wynn Las Vegas. President Andrew Pascal has resigned from the company effective December 1st, 2010. Andrew, Elaine Wynn's nephew, had been groomed to be the heir apparent of the Wynn dynasty and could always be seen walking the resort, attending to details large and small. In fact, I saw him at the Lakeside Grill during their second day of operation, but not a week and a day ago. Here's the muted 8K. Again, we're going to pass that. 3 weeks ago, or 3 weeks notice, question mark. Despite the no disagreements statement, this sounds incredibly fishy. The big question is here is where will Andrew take all of this intimate knowledge and experience of the Wynn way of doing things? Cosmo, doubtful. And MGM property, very doubtful. My guess is that Carl Icahn, hired him away to take over running his resort empire, including finishing and operating Fontainebleau as CEO. Anyone question marks? Update. So this person got an update from the Wynn. I just got off the phone with Wynn Resorts VP of PR, Jennifer Dune, who provided a little bit of backstory about Andrew Pascal's decision to leave the company. Apparently, Andrew approached Mr. Wynn 6 or so weeks ago about leaving the company, and after some very amicable discussions, they agreed to keep the change confidential until a replacement, Marilyn Wynn, could be named. The folks are definitely very sad to see Andrew go, as he was very well respected for his professionalism and command of their product and team. Not only was he a part of the Wynn exec team, he was literally part of the family. He is still part of the family. For what it's worth, I definitely vouch for Andrew being a total pro and a super nice guy. He has been incredibly generous with his time and thoughts every time I've lobbed a thorny business or casino design question at him. Miss Dune does not know what Andrew's post-win plans are. Well, let's see what we've got. So he left December 2010. What could have happened next? Well, knowing what we know now, we know my head keeps coming out of the picture. Alon Leisure, that was a property that was being talked about at the end of the strip. And Play Studios got its ground in 2011. So Andrew is kind of building this character that he's got hustle. His uncle Steve Wynn supports him. He's been supporting him. He's always taken him under his wing, it feels like. Andrew's very professional and a pro. Um, this Vegas website is pretty cool. It gives a lot of insights and opinions on uh, the whole Andrew Pascal, Steve Wynn situation. So the next article we have is Elaine Wynn talking about her nephew's land deal. Again, this land deal that we're talking about is Alon Leisure. So basically, to catch you up, this is March 25, 2015. This is 5 years after he left the Wynn as the president and COO. So Elaine Wynn is fighting to keep her spot on the board for Alon Leisure. She had no knowledge or involvement in the land deal to help her nephew. It would have been contrary to her own financial interests since she's with Wynn Resorts. So, I mean, a little bit of, I don't want to say shakiness, but this Elon deal, um, it would have been, I think, competition to Steve Wynn. There's several articles out there that kind of go both ways, depending on how you look at this. But Alon Leisure's failed, but I do want to kind of show you guys the kind of character Andrew is. Um, so Alon was working with Crown Ventures, which was, I believe, an Australian-backed resort company. Yep. So Crown divested its interest after saying they wanted to commit. Andrew said, they're trying to resolve how they're going to refinance the project. As you know, Crown came in and invested based on the idea of Alon, and now Alon is positioned and the strength of their team. Now the Crown has got a lot of things going on, and they no longer want to continue to invest going forward. Out of the blue, they pulled out. Did Steve Wynn have something to do with that? I don't know. I'll let you be the decider here. Again, Steve Wynn and Andrew Pascal have a great family bond. I mean, Steve's been very open with Andrew. Andrew, I think, has been a hustler since he was a kid, I guess, from previous articles. Um, so that's kind of my history of Andrew. I just kind of want to get a sense of his character. If we type in Andrew Pascal and Steve Wynn, just seeing what we come up with here. In terms of images, again, they're family, so we would anticipate they would be seen together. Here's a picture of Elaine Wynn, Steve Wynn, and Andrew. I don't know what Andrew's doing, probably sitting. Steve Wynn, employee sues Steve Wynn. Again, there's a lot of articles about Steve Wynn and what he's doing. He's currently selling off a lot of real estate. You can speculate to what you want, but we're just going to stick to Play Studios here. So the next thing I want to talk to you guys now is about fundamental analysis of Play Studios stock. We'll talk about technical analysis and then my overall summary for Play Studios. All right, so we are now going to look at the fundamental analysis of Play Studios. Excuse me. We're going to see if the stock is undervalued, overvalued, cheap, or just plain out, just not worth it. So we're going to look at the financial data points here. I have a very simple way of aggressively calculating the stock price, conservatively calculating. And it kind of depends on the market cap. So right now, Play Studios has a $540 million market cap. We're going to look for ownership by Stephen Cloobeck and Steve Wynn. So we're going to go to this website, which shows us how many institutions, hedge funds, institutional investors own in the company. So we'll go back there in a second. So looking at the current, um, we're going to do this three ways, three different ways here. So this first way is going to be extremely conservative. It's going to be sales plus income plus cash divided by shares float. And shares float right here means the shares that are available for people like you and myself and other people, not including the company or other locked up stocks. So let's go ahead and do some quick math. I'm going to open my calculator. So we have 282.9 in sales, and we're going to plus income, which is actually negative, so minus 15.5 million. And we're going to go to cash really quick. And it's my freeze my computer. Cash is going to be here, balance sheet. So it says 213 million right here, but we know that they acquired Brainium and they have 142 million cash. So we're just going to go with 142 instead of 213 plus 142. Okay, so we have 409 million in sales plus cash. And we are going to divide that by 81.74. So basically, the cash generated from the company and reserves divided by shares outstanding. So we're going to divide by 81.74. So this is going to give us a fair share price of $5, basically. That is very conservative. Now, what we're going to do next is going to be a little bit less conservative. Sorry. So we're going to take the market cap of the company, which is 540.3, plus 282.9 minus 15.5 plus the cash, 142. And we're going to divide it by 81.74. This is an $11.6 stock. Again, this is like if I see the stock price going over this, I'm going to say, okay, this is overvalued. But that doesn't, again, we're not counting the Brainium revenue. We're not counting future growth. We're not accounting for stock buyback. We're not accounting for shares float being dried up because I'm buying some. And then this third way of calculating, we are just going to look at market cap and sales. And we're going to remove income divided by, so this is going to be our medium. So we have the low of $5, the high of 11, and this is going to be our midpoint, which is 540.3 plus 282.9 minus 15.5 and divided by 81.74. So the midpoint's going to be 988. So again, my calculations here indicate this is undervalued. Do your own research. Doing this before has led me to find stocks like Renasola as my latest one, which I found around $1, which went to 35. Digital Turbine apps that went from $1 to $100. I've seen AMD run crazy. Sava, ticker symbol SAVA. Signet Jewelers. Do your own research. And then if you pair this with like a revolutionary type story, again, this is kind of breaking the barriers for casino gaming because using play rewards for real services and products, just amazing. So fundamentally, I think this is undervalued. They have, let me just call out some data points. Do you see this here? No debt. Quick ratio, 8. They have a ton of cash. That's why. Earnings per share next year, 92%. They have EPS for the next 5 years. Don't believe that because we never know what the future is going to hold. We could have some black swan events. However, black swan events that would lead people to staying home might help. So don't ever pay attention to the 5 year. Insiders are selling. Let's take a look at that because that is concerning. Institutions are buying. That's positive. Gross margin 69%. That is disgusting in a good way. 81 million shares available. This is our under 100 million float. So this could be pretty volatile in the next year or two, three, four. Analysts have this target price of $5.12, but we don't really like to listen to analysts because how they generate their numbers are weird. They have $5.12 as their target. I have $5 at the very low end. So it's kind of close how they are getting their numbers. Negative operating, negative profit. Let's go down and look at their data points here. Let's go back to income. Okay. We can see 2020 they had 269 mil, 2021 287, trailing 12 months around 282. Again, this goes back to that presentation slide where we saw those 3 years kind of just being stagnant. Gross profit is growing slowly but surely. Net income. Net income took a big hit this year. Let's look at the balance sheet. This is old financial data points as well, so take it with a grain of salt. Don't hate me for going off this. I know they have updated financials, but I don't like digging into the weeds so much that I can't glean what's on this website. So cash, they have 142 million as of now. Total assets 334. Total liabilities 31. Again, that's almost a 10x assets over liabilities. That is beautiful. Let's look at the sales. So the CFO sold out so much. Sold a ton of shares. Almost about 50%, over 50, about more than 50, less than 50% of his shares. I don't know why. I don't know if it was planned. I don't really care. But as we can see down here, Andrew Pascal has been buying like crazy last year. Last year, exactly January 20. Right now it's January 16. Will he buy again? This is why I'm not a huge fundamental analyst, because past performance isn't indicative of future performance, whereas technical analysis kind of gives you a little picture of what's to come. So technically, I think this is undervalued. Do your own research. The CEO has bought a lot, over $1 million, $2 million worth in the past 2 years, to say. While the CFO, who knows the books, has sold off a lot. So maybe there's something going on. So let's go to whalewisdom.com. This is another website that tracks ownership of institutions, hedge funds, etc. And let's see if we have PlayStudios here. We do. All right, and I think I need to sign in order to see this information. Yep, log in first. All right, I'm Okay. So we are gonna go down to the largest holders. Again, this table is pretty helpful if you want to get a glance at who's holding. I don't really care for that now. I just want to see if Steve Wynn is still supporting his nephew. These ads are insane. Okay, what the heck is this? I don't know. So let's look at market value. And we're going to go all the way to the top. So we have Andrew Pascal as number one. And we can see MGM. Andrew Pascal is the number one shareholder now? Is that right? Okay, shares held in principal amount. Andrew Pascal is the number one shareholder here. That is pretty cool. He was number two. Number two is MGM Resorts at 16 million shares. That is an $80 million market cap. His connections with Steve Wynn, his nephew, or I'm sorry, his uncle, coming in there. I think Steve Wynn's associated with MGM. Let me see. Steve Wynn, MGM. I don't know. Does Steve win an MGM? So Wynn sold his company Mirage Resorts to MGM, resulting in the formation of MGM Mirage. I'm not 100% sure. Um, but again, his connections at the higher level. Activision Blizzard owns 12.6%, or I'm sorry, owns 12.6 million shares. Microsoft is, I don't know if they're still trying to acquire Activision, but that would mean Microsoft then owns a position there. So yeah, that's what I want to show you guys in terms of hedge funds. Stephen J. Cloobeck, let's see if he is a holder as well. All right, so I am doing a search for Stephen J. Cloobeck to find out which companies he is currently holding. I want to see if he is still holding on to Play Studios or if he sold out to not perform, but to be part of that lawsuit. Yeah, so it's not showing anything. So who knows how big of a position Stephen Klubeck had, but I think that kind of summarizes, we couldn't really find anything. So on to the next task. Right. So one of my favorite things to do and one of my strengths is looking at the technical analysis of a company. That is looking at supports, resistances, and kind of lining it up to with the company's story. I believe Play Studios' story is a tremendously positive one. I think it is one of the strongest growth companies entering the 2020s. Um, so let's look at some patterns. Let's look at the charts. Um, I'm on Finviz right now, and it looks like they have this charted out as a breakout right here. We want to take Finviz charting with a grain of salt because I don't know how they are having their systems calculate this, but depending on what angle they're looking at, this could be a breakout or it could be a bust. So let's take this into our own hands. And again, I look at things on the bigger picture and then go down to the smaller picture. So we're going to start at the smaller picture and go to the big picture. So excuse the lines that I have, but it will tell us a story. So I'm going to go into a Thinkorswim right now. Let me zoom in for everybody. Actually, I don't need to zoom in yet. So what we're looking at here is the daily time frame over the last, ever since it's been a publicly traded company. This should be like June. Yeah, June 2021. So we have, it looks like a descending triangle that failed to break out. This looks like a busted ascending triangle, which is a positive thing in my opinion. Right here, we can see this huge volume selling off. This was 9 million selling off right here. This was when the share lockup expired. So people wanted to get their money out. Um, don't blame them. Cash is king nowadays. So um, we're in an overall long-term downtrend. We have this being our furthermost support. We can see the stock has never broken past this. We see resistance here, and resistance here. And the stock is coming to test it. So it looks like maybe this week. So I have 100% certainty this week we'll see $4.37, but I don't know if we will break that. I am bearish over the next couple months, and I'll show you why. But we should be testing that here soon. In terms of patterns we're seeing on the daily, it looks like we have, I want to say an inverse head and shoulders, possibly. Um, so right here we have the left shoulder. Here we have the head, which is going to be the lowest part. And then we have the right shoulder building here. So we should see a test right here. I would not be shocked to see this come up to $5.31 and then come back down and retest the purple line here. But again, I like the bigger time frame. It tells a better story. So let's look at the weekly and work our way up to the monthly. So again, the weekly gives us the same kind of picture. We have a descending triangle that failed. It busted here. We can see it acted as support, 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 and now it's support again and then resistance. We can see it breaks through, acts as support, and then resistance, 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 resistance. And this huge candle here, it was almost a 1 million share candle, which would be the most volume since December 12th, 2022. So we'll see if it can break through next week. Who knows? But again, we have left shoulder, head, right shoulder. It's kind of busted on the weekly, in my opinion. And again, we have these same uh, supports and channels going down. So now we're going to look at the monthly. And this is where I'm most excited, honestly, because it gives a better picture of the head and shoulders that we see forming. And I'll show you exactly what I mean. Apologies there. Okay, so here is our left shoulder here. Here is our head right here. And now we're going to see the building. We see the building of the right shoulder right here. And what this might look like, let me just draw some quick support. So what I think this is going to look like is the stock is going to come up to here. Whoops. And we're just going to make it faint. So the stock's going to come up to test here to make the right shoulder. So we'll have the left shoulder, the head, right shoulder here. And the company is going to come to a make or break situation, which I think is going to be a positive or maybe a negative. So we'll see the price come up and test $5.30 over the next 4 months. Then we'll see the stock come back to around 450 before we see a potential move that breaks out of this descending triangle for a very bullish move. This is only going to happen if the company executes. So what I might mean by that is we see revenues for Brainium, we see cross-platform integrations for the Play rewards, potential share buybacks from the company within the next quarter or two. Um, and again, we could see fall down or the stock falling down below the 324, which I think would be the most. I think it's a very plausible scenario and ideal because I think the company needs to hit a lower level for healthy pullbacks. So, if we look here, we have a run up and it kind of hits its head and comes down, build support, come up, build support, hits its head, and then a further down like a W per se, like boom, 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 boom. So again, I want this to go. If I can get this under $3, I am buying hand over fist. That is my personal goal. Again, I want to own 100,000 shares of Play Studios before 2025. Under $5, that would be amazing. My current share average is 590. So continuing to buy down. I think I still have plenty of time to purchase at what I think is a good price. Please do your own research. I'm not a financial person. Yeah, see, I don't even know what I'm talking about. So yeah, do your own research. I think the stock is poised to either do a breakdown, a pullback, or it could just continue its move up. Um, but yeah, I think either way, the stock is heading for higher highs as the economy and the company continues to strengthen. Let me have my final words and get your guys' thoughts on this video and on the company. All right, guys. So just wanted to share final thoughts on Play Studios, ticker symbol MYPS. Again, I think this company is transforming the gaming and casino style games. You play for free to earn loyalty points, and then you can redeem those for real life rewards, drinks, meals, food, hotels, cruises, electric bicycles, electric scooters, Vegas shows. And I feel like I'm missing so many others. Travel. Um, no other company is really doing that. They are not only interconnecting their play rewards for all the games, but they're continuing to grow. They acquired Brainium to add several new games and different play style to their portfolio. They're going to increase their in-ad profitability margins. So their margins are going to get even better. They have 142 million in cash to play with. They have a 50 million share repurchase program that I'm hoping they'll probably buy during this next potential downturn. I hope the stock gets under $3. Not so people get wrecked or knocked out of positions, but so people who are very optimistic and want to take advantage of those prices have an opportunity to get into a potential life-changing investment. In my opinion, I do own a position in this company. I own quite a bit of stock. Again, my goal is to get to 100,000 shares. I'm closer to 100,000 than I am zero. My share average is $5.93. I continue to add every week or so and would add quite a bit more if it gets under $3 or back to $3. So, again, do your research on this company. I really like this company. I like the CEO. I think he is a pretty good leader. I like his connection to Steve Wynn. But anyway, thank you guys for watching. Please let me know your thoughts on my videos. If you don't like me, if you are short, long the stock, what you think of the ads or not the ads, the games, and what you think about the stock. I hope you guys are doing well. Thank you for hanging out with me. If you made it this far, please subscribe to my YouTube channel, and I'll talk to you soon. Bye.